All right, in this video, I want to show why this bearish opportunity for euro dollar on the monthly chart is probably the best opportunity that I've ever seen in my trading career. So let's start with where we are here. Now, this is a macro trade. It is on the monthly chart, but it is the most powerful of the advanced patterns, being the bearish Gartley pattern. So I'm going to walk through the rules of engagement, talk about where we are, and talk about things to consider. So identifying this swing here, okay, swing high to swing low, and going ahead and grabbing our Fibonacci retracement tool and measuring, okay, swing high to swing low, okay. And if you notice, we come right up here, wick up and touch the 618 retracement here. Okay, so that's giving us our 618, verifying, validating that we are in Gartley territory. So then validating the C leg here, this is valid B. Validating C down here, so we're looking for another 618 of A to B. So from A to B, and you see he really wants to wick down and touch the 618. Now this one is the most special. That's why I said this is the most powerful one, because this one is making up the 222 Gartley pattern. This is the one that the founder talked about, H.M. Gartley, in his book Profits in the Stock Market, when he talked about this. And he says that in trading this over 30 years, it won 7 out of 10 times, meaning it had a 70% success rate. Now, I don't believe that, because I can't say it. I mean, I've traded a lot of Gartley patterns. I can't say it went 70% of the time. But we're going to go off of this one, which is the most perfect. And that's going to bring us up to the entry up here at the D leg. So this has what I would call 3-star confluence, meaning it has 3 levels that are confluent with each other. The first one is the 786 retracement of X to A. Okay, and you see you wick up here and you hit this 786 right here. That's also confluent with the other condition you will use for the D leg, which is an extension, a 127 extension of A to B. So if I grab the extension tool and I measure from A to B and come back, and you'll see the 127 extension of A to B is overlapping directly on top with the 786 retracement of A to B. They are overlapping. This is racial confluence at its highest level, okay? So you got your 127 extension, you got your 786, and then last but not least, your A to B is equal to CD pattern. So just making an A to B is equal to CD pattern from the A and B leg and cloning it, because we're talking about an equal measure move. If A to B being equal to C and D, and I clone it, and I take that and put it on C, it's all in the same area, okay, all lined up. So this was the kill zone and entry. Okay, so let's talk about some of the other things that took place. The pattern actually filled back in June, okay, when June it filled. That doesn't mean it would have been time to enter. It would have been, you would have needed confirmation in July. Okay, confirmation in July. Some traders would have entered in June, had profits from July, that's the yellow candle, the bearish candle, but August would have started taking some of that back. No, that's okay, because that's simply just a retest of that area. Doesn't mean that this is going to get smoked. Doesn't mean it's going to live. But I do want to show you guys something real fast. I want to start to come in. I'm going to come in a little bit closer, okay, to show you what things are actually really looking like. Okay, so I just jumped into the 4-hour. So here's the fill in this area. This is a retest, and then you do get a break and close, and then just another like retest. But if you notice, even though we're on a higher time frame, this thing is still creating lower highs. Okay, lower highs all the way through. So this is the confirmation that the trade is working, even though technically you could say we're early to the party. But the problem is, well, not problem, is again, how does a trader really want to approach this? Do they enter now, right? Because technically the trade filled and then had a confirmed bearish candle after, or bearish month after. This is the retracement. This would just be riding through it. Let me go ahead and throw the body on here so we can see what this bad boy actually really looks like. And it will look like this. Make sure that you read the disclaimer Okay, so this is a filled Gartley pattern on the monthly chart. 222 Gartley pattern, meaning it's the perfect one. It's the best of the best. They don't get better than this. Other things that are happening here, and as you can see here, still at this point, RSI above 80, okay, meaning extremely overbought. We don't really have any bearish divergence. I mean, maybe at another point in time we'll get it, but at least overbought. I'd love to have that bearish divergence, and I would love to have some type of three bar reversal confirmation, but this might have to be one where we have to pass that up. Now let's talk about why it would be a better idea for a trader to just take this and stay in this trade for a few months versus messing around in this range, this choppy range here that's not, because it's no longer trending. You want the price action to really start moving down on this. But let's talk about why. We're going to look at a standard lot, everybody's favorite number. So we're not going to shortcut this thing. We're not going to talk about mini lots, micros, or anything like that, because I want to show you the potential versus what a person can make versus, taking the long macro opportunity versus jumping in and out, taking losses and all that kind of stuff. Let's just look at it from a one-shot perspective. We're going to go ahead and enter on that. Okay, I entered. We're going to put the stop loss right above the price action right here. Okay, right above it. Okay, we can give this as much room as you feel comfortable with. Okay, we can go up here. We'll say we want to risk $350. On a Gartley pattern, really your stop should be above X, meaning you're risking $734. I think that's going to be too much for most people. So we're just going to treat this area here like it's 3-bar reversal, and we're going to say we're risking $227 that our Gartley rolls over versus profits, right? Way down here. Okay. So risking 227 to make 1440. Okay. Now this would take, so it took 1, 2, 3, 4, 5, 6 months to get up there. So if you took 6 months down, what if in 6 months your little standard lot made you 1400? See, the problem is there are too many people out there telling you can just make 1400 in one day. It's really not, I mean, to each his own, but you want to take the best of the best opportunities, and this is one of the best that I've seen. So we broke down the rules of engagement, talked about what it looks like on entry. Because it's on a macro, such a large time frame, you're going to have your trade psychology in place and look at this as a real investment. This is not something you're going to be looking at and checking every day and worrying. This one is the one you're going to say, hey, I got a really nice large position size on euro dollar. Some traders might even be able to go higher than one standard lot. 2 standard lots makes this almost a $3,000 trade on 2 standard lots. So that's our PRZ, our potential reversal zone. We talked about that. We talked about the rules of engagement. We talked about it being overbought, but, yeah, this is something that I had to go ahead and just make the investment and enter early on, and we'll see what happens. Now, remember, there is a disclaimer. This is not trade advice. This is not a trade signal. I'm talking about something that's happening in the financial markets that does make for a very interesting opportunity. So trade at your own risk. Consult with a financial advisor of your choice if you're concerned about what to do with your money when it comes to the financial markets. Okay, give this one a thumbs up if you like the video. Share it if you know someone that it could help. It's got a very good Gartley lesson in here. Subscribe to the channel if you're not subscribed. Hit the bell icon so you could be notified. And last but not least, head on over to the Harmonic Trading Academy playlist under the playlist section, where we teach this advanced Gartley pattern and all the other advanced patterns in great detail. That and much more at the Harmonic Trading Academy. So you guys be good, take care of yourself, and I'll see you on the next video.